NVIDIA just pulled in $46 billion in sales in a single quarter, more than Netflix, Tesla, and AMD combined. Net income? $26 billion. The stock is sitting near record highs. But here's the question. Is NVIDIA still a smart buy, or are investors about to get burned? Stick with me, because in the next few minutes we'll cover the growth story, the risks first, the fundamentals. In the second quarter of fiscal 2026, NVIDIA's revenue jumped 56% year over year and 12% from last quarter. Earnings per share beat expectations, and gross margins hit an incredible 73%, some of the highest in all of tech. To put it simply, NVIDIA is growing at startup speed while already a $4 trillion company, but numbers alone don't tell the full story. Here's what's driving it. Almost 90% of NVIDIA's growth now comes from data center GPUs, bought by Amazon, Microsoft, Google, and Meta. These cloud giants are in an AI arms race, spending tens of billions to build infrastructure. Great news for NVIDIA, but here's the catch. Hyperscaler spending is cyclical. When budgets tighten, NVIDIA's revenue can swing hard from quarter to quarter. Competition? On paper, NVIDIA looks untouchable with 92% GPU market share. AMD's MI300 is making small waves, and Intel is still trying. But the bigger, longer-term risk isn't them. It's big tech building their own silicon. Google has TPUs, Amazon Trainium, Microsoft Maya, Meta MTIA. They aren't on NVIDIA's level yet, but if they close the gap, margins could be at risk. So why does NVIDIA keep winning? One word, CUDA. For over 15 years, CUDA has been the backbone of AI development. Developers have built their tools, libraries, and workflows around it. Switching away would be painful. And that's NVIDIA's real moat. Hardware can be copied, ecosystems can't. Now, valuation. NVIDIA trades at about 30 to 35 times forward earnings versus a tech sector average of 25. Expensive, no doubt, but with earnings expected to grow over 30% a year, some argue the premium is fair. The real question is expectation. If the AI market grows to $4 trillion by 2030, today's price looks justified. But if it ends up closer to $2 trillion, NVIDIA could suddenly look overpriced. So is it still worth buying? For long-term investors, yes. NVIDIA is still the #1 AI play with unmatched dominance in a sticky ecosystem. But for short-term traders, the stock is stretched. Chasing at all-time highs is risky. A pullback into the 170S could be a smarter entry.